Good morning, everybody. I always love that little 3, 2, 1 countdown that we get in the background and that little nervous pause and your live moment. So look, good morning. Thank you very much for joining us on the latest VentureForge webinar. Today, we're talking all things Amazon vendor negotiations. I think our marketing team might have pitched this as we can now solve all your vendor negotiation problems in a 1-hour webinar. I'm not quite sure that will be the outcome of today, given the topic that we're talking about and the difficulty around it, but we have got a really good solid panel of people that have been there, done it, bought the t-shirt, and I've got lots of experience on different sides of the fence: agency, Amazon, software partner, and brand. So we've got some good guests, and I'll introduce you to those guys in a few seconds. For those that aren't familiar with us or with VentureForge, I'm Andy Banks, and I'm the CEO of VentureForge. We're a commercial partner for mid-market to enterprise brands, helping them make the most of Amazon, regardless of whether they're a vendor, seller, or hybrid, as most of the world is heading towards. I suspect we'll come to a little bit of that today as well. Before we go into intros, we are going to go to a Q&A at the end of today once we've had our conversation. So please jump into the questions section down the bottom right-hand side of your screen. Let's get the questions going as we're going through the conversation. I wouldn't say there's anything that's off-piste. Get the questions in. Find out what you want to find out from our panel of experts, and we'll get to those at the end of today's conversation. So let me start. Maybe top right, Travis. Would you like to introduce yourself as the new face at VentureForge?
Hey everyone. Yeah, they've been a good few weeks, I guess. I'm still in my infancy at VentureForge, but I'm the head of vendor accounts, so really enjoying it. Previous experience, always been in the Amazon game. Started my career at Amazon as a brand specialist, mainly focused on beauty, so I had to get to grips with skincare, what's retinol, what's hyaluronic acid, and all of the like that. And then dipped my toes into the pharmaceutical side of things, and after that into the agency game. So I've hit the holy trifecta, as they say, like that, with an Amazon game: seller, agency, and Amazon. Looking forward to being here today.
Great, thanks, Travis. And before you get accused of being New Zealand, Australian, you are actually South African, given the kind of warm chat we've had.
Yeah, I'm South African born and raised, so if there's any Kiwis or Aussies on the call, I'm really sorry about the rugby results. I just had to put that out there the past few weeks, but yeah, I'm South African born and raised.
Fantastic, thanks, Travis. And Chris, I'll come down to you in the bottom right-hand corner next on my list.
Sure, nice to meet you all. It's great to be here. I'm Chris from KhooCommerce. I'm the founder of that software company. We're essentially helping vendor users process their orders more efficiently, effectively, make ASN smoothly. I'm much more operational focused, so talking about programs like Pix, Acapulco, EDI, operations outbound, really focusing on Amazon's inbound, shortages, and chargebacks. To date, we've processed about $1 billion worth of orders through to Amazon, with customers mainly in the UK and the US, but obviously across Europe and the rest of the world as well. But I'm a real nerd. I really like carton labeling. I like software integrations. I like things working well. I like labels being printed. I'm just such a nerd for that kind of stuff. But it's really a pleasure to be here with you all, and looking forward to our discussion today.
Fantastic. Thanks for joining us, Chris. Shall we play guess the accent with your accent as well? Because I think you often get a little bit of confusion and accused of being American or Canadian at times.
Yeah, I try, and if I'm talking just with British people, I try and really layer it on thick, just to say, I'm British, but my wife of 18 months now is American, so I'm slowly transitioning to saying words like sidewalk, couch, and tomato and tomato. I confuse myself. I say fries and chips. That's the worst one for me.
Brilliant. Well, look, thanks for joining us this morning, Chris. I know you kind of hopped off one call straight onto this, so it's very much appreciated. And then finally, Tom, for last but not least, mate, but do you want to introduce yourself and say good morning?
Yes, good morning, everybody. Nice to meet you. I'm Tom. I'm head of marketplace at a company called Cosatto. We are in the baby sector, so we sell car seats, predominantly travel system strollers. My previous experience is in multiple different verticals on Amazon, from refurb, tech to fashion. I've worked on both sides of the coin, working for retailers that sell brands. So probably a thorn in the side of most vendors. Certainly at $4.59 on a Friday when you put your prices down £5 for the weekend. And then most recently for the past 3 years been at Cosatto heading this up.
Fantastic. Thank you, Tom. Out of interest, Tom, how many rounds of vendor negotiations have you been through over the years, and how battle scarred are you?
I don't know, 4 or 5, maybe 6. I think we'll probably get into the crux of it shortly, but yeah, just for, I think my best anecdote is that Amazon actually, when I started at Cosatto, got in touch with the owner of our company to complain about me and said I was an absolute nightmare to deal with, essentially because I just wouldn't sign what they were putting in front of me. So I think if you're doing that, you're probably doing a good job for your brand anyway, maybe not for Amazon.
I can just see the headline on your CV. Should you ever start to change location, I got told off for being too harsh with Amazon, but we'll get into the meat of that today. So, guys, thank you for the intros, and again, thanks for joining us. Today is obviously all about vendor negotiations and how you navigate that and enforce and make sure you get value from that relationship when you're working with Amazon. And clearly, that's prompted by the upcoming pending vendor negotiations. Before we get into the conversation, I'm always keen to get a feel for how you guys that are listening to this feel and where you are in the context of the conversation. So it's going to pop up a quick poll. Keen to see how prepared do you all feel for your upcoming Amazon vendor negotiations. And if this goes to plan, it has gone to plan, that should appear on the screen. And often very interested to see where these results come out at. Just give us a few minutes. Oh, we've got our first very prepared. That's a nice one to see come in. So it's nice to see somebody's doing the job. Is that you, Tom?
He's prepared to reject their first offer before they do.
That's his negotiation plan. Say no first time. Buy yourself a week or two.
Yeah. Don't even let him explain the proposal. Just say, "Hi, Tom." No.
Okay, what are you going to say? No, give me a second offer.
Well, actually, that's maybe not as polarizing as we normally have. We deliberately set these polls to try and see how people are feeling, but actually quite reassuring that the vast majority of people are somewhat prepared. I think that's probably a fair assessment of how I'd feel if I was a brand. I don't think you can ever feel fully prepared for a negotiation with Amazon because you don't know what's coming down the tracks. Bit concerned we've got 3 people that aren't prepared at all, but maybe today's step 1 of that preparation. We can hopefully give you a few pointers as we go. So I'll say, please get the questions coming in. I can see we've got one has dropped in already, which is great, and we'll get to that at the end. So please drop those in as we go through our conversation. I think, Travis, I might kind of come in your direction first as kind of the general, kind of, one, the ex-Amazon guy, that's great, and 2, that kind of general cover-all on all things vendor. I'm conscious we might have an audience that's at different stages in their knowledge. Can we maybe start with something really simple? What is an AVN? Let's get that acronym out of the way. And when will Amazon start to instigate that conversation for the annual negotiations?
Yeah, no, thanks. So AVN is annual vendor negotiations, as the acronym says, but it's also your joint business plan. So could sort of be used interchangeably, but AVN is the general term. And Amazon generally initiates these conversations towards the end of Q3, midway through Q4. So by the end of the fiscal year, they can almost wrap it up. They don't really like to drag terms into the new year because obviously if you're still processing orders, you're still doing deliveries, you're essentially costing the Amazon machine, if I can say it like that. So yeah, they'll sort of initiate it with vendors going into Q4 just to make sure that they can wrap up sort of before Christmas time, before the new year, so you can hit the new terms running into the new year.
Do you think that's deliberately put into Q3, Q4 travel when people have kind of got their heads down and trading and might be a little bit distracted?
Well, I know it definitely adds an extra layer of stress, especially if you're going into sort of, now Prime Day 2.0, the autumn deals period, Black Friday, Christmas. It is a little bit hard, but I think it also gives really nice focus because it is peak period. So you're already got skin in the game with Amazon, if I can say it like that. You're probably talking to your AVS if you have, when you're talking to your VM if you have one. So it's quite a nice sort of way to just nudge it into the conversation. I mean, the timing's, in all honesty, never really ideal because sometimes it is a hard conversation to have. But yeah, I think it's mainly just to give any extra time for your internal teams to see their capabilities, Amazon internal teams to check their capabilities, and then you sort of meet in the middle, shake hands, and hopefully everyone's happy. So it just gives enough time for that sort of discourse and debate to sort of take time.
You painted a very rosy picture, Travel. If you shake hands, you agree, everybody's happy. But in reality, what should you expect when you enter those negotiations with Amazon? What does it feel like? How does the process flow?
So to be brutally honest, Amazon is data centric. They run all their decisions on data. It's not just like okay, yeah, that's what I feel it should be. Not at all. Amazon's going to hit you with numbers. They're going to hit you with margin requests. They're going to hit you with fulfillment sort of rates. Every sort of data point that they can bring, from pricing to logistics to funding, they're going to hammer at you like that. and they don't really always celebrate the wins. Obviously, if you've done something really good, they'll give you a bit of a pat on the back, but they're going to hammer on the negatives. They're going to hammer on any margin dilution, any sort of back year-on-year terms like that, where you maybe not fulfilling your side of the deal for the previous year going forward. So I wouldn't say it's always a rosy picture, but I've always approached it as like, yes, we're all humans. We're all trying to sort of hit our KPIs internally. Amazon's got its own KPIs. Your VM's got its own KPIs. Your AVS has its own KPIs. And obviously, if you can help them hit those, I think they'll be a bit more inclined to be a little bit more lenient on you and sort of help you hit your KPIs, i.e. lower cost prices, better delivery sort of metrics, those types of things.
You talked a bit there, Charlie, about a lot there about the power of that data, how data-led Amazon will be. That on the receiving end of that, if you're unprepared, and I've just pulled our poll answers back up here, but that could feel quite heavy. You know, how... So I've got lots of questions hanging off that. What kind of KPIs are important to Amazon at the moment, and how can the brands that are on this call today prepare for that? What's their equivalent of being prepared for that conversation?
Yeah, so I think it really depends what side you look at it. Obviously, there's the financial side of things, which is the cost prices, the margin, the contribution profits within Amazon. They obviously won't share those with you for obvious reasons, but Amazon also has to hit those metrics to just remain profitable. So there's that one side of things, but then there's also logistics when it comes to fill rate, confirmation rate. Amazon being the most customer-centric organization, according to them, in the world. I think we can all sort of agree that they do put in pretty good graft with next day delivery, returns, all that. They want to make sure that they can still fund that and deliver on essentially promises to the customers. Customers that are buying through Amazon don't always just realize, oh, there's actually people behind the scenes that if you can't process orders, your confirmation rate's low, your full rate's low, you miss delivery schedules, that all impacts their sort of buying experience. And obviously Amazon's the face of that, so they get the brunt of that. So as a vendor, I would probably say, look internally, obviously realign your margins to make sure that when you go into negotiations, you're able to sort of counteract Amazon's requests and sort of rebuttal it, but also you're not putting yourself in a hole halfway through the following year where these cost prices just aren't working anymore. For example, your logistics costs might go up, your manpower costs might go up, your input or raw material costs might go up. So factor all of those things in as a, I wouldn't say a worst case scenario, but a what if scenario. Always have extra little bits and pieces that fill into that sort of gap and leverage your know-how. I mean, if you know you're a strong competitor in the market, don't be afraid to flex those muscles. If you're the only client in the market that can give Amazon a certain product, don't be afraid to say that. So I think knowing your worth is also a really important thing. But yeah, there's so many metrics when it comes to it. But I'd definitely say leverage your own data, look at your market position, and just don't be afraid to say no. Amazon sort of values partnerships and they don't value conflict. And they sort of look for the long-term sort of partnership view. So don't think the first 2, 3, 4 months, think the following year, the year after that, because I think we're all in this for the long run with Amazon. I mean, it's here to stay, so might as well just do with it while we can.
Yeah, Andy, I don't know if I can jump in on that.
Yeah,
just,
go for it, Chris.
Travis, what you're saying there to do with like those metrics and the whole picture. It's definitely a narrative that I really encourage people to think about. It's very easy to just say, you know, I buy it for £5 and I sell it to Amazon for £10. You know, my margin is good, but you need to factor in, you know, your advertising cost, your logistics cost, your co-ops agreements, your any other returns, your damage allowance. Like there's a huge spreadsheets you can build with columns for everything, but it's worth taking the time to ensure that everything is actually ultimately profitable. And you know, the big costs hidden in that are also like the shortages and chargebacks. Like if you've got, you know, if 5% of your units get shorted, or if you're getting charges on particular ASINs because of prep, or maybe you've accepted that, but having that really good view is very, very important to making sure that each product is profitable, and knowing what your limits are and what you can do with the cost, I think is very important. And also like what you're saying there, Travis, that it's not just thinking about, well, this is going to work for the next year, because you can absolutely put money on it this time next year. They will come back and they will try and move the needle a little bit more. And I always encourage people to think, you know, if you've got like price over time as a graph, you can imagine your margin is potentially going to get slightly eroded over time, or, you know, your prices are going to go up and, you know, things are going to change. So having that future view and understanding actually what's our strategy. I mean, I'm not a super strategy consultant. I'm much more in the ops side, looking at that whole picture. But I think from a brand perspective, you need to think, well, here's these products. These are working really well on vendor. These products, maybe we transition them to seller. or actually maybe we need to rebundle or rework this particular product range because over time the margin has not worked out for us. So I would just echo that and add to that factoring in those other things like shortages and chargebacks are really, really critical.
There's a couple of interesting points, Crowley. I think, Trav, you opened up with data, then you also talked very much about there's still people on the other side and there's partnership. And I think knowing your world and going to that negotiation, knowing where you stand, knowing what you want, and looking at it through that perspective is super important. I've always put Amazon in, I think a lot of people put Amazon in this big, scary monster camp. And for me, it's still another retailer buying your products and trying to negotiate a deal that works for them and works for you. And for me, it's having that clarity and being prepared for that conversation as to what does work for you, having an awareness and understanding of what works, not just for Amazon, but for the people that you're dealing with at Amazon. What are their KPIs? What are they tasked on? And somehow, I suppose this is the holy grail, finding a lovely little meeting point in the middle where there's a mutual win-win. It's very easy to think this is some monstrous organisation that's going to hit me with a stick and the algorithm says no, when actually it is a negotiation. I mean, I'm guessing, Tom, from where you opened up, it might not feel like a two-way street all the time, and sometimes you have to go hard on that. But what's your experience of entering into negotiations with Amazon, Tom? You alluded to a little bit at the beginning, but how does it feel from a brand's perspective?
I think the key to any negotiation is know your account and know it inside out. So know what you offer to Amazon, how much that's worth, a little bit like Trav said, in terms of whether it's market share or whether it's just pure pound notes of what you're offering. But it can be a real flip of the coin depending on who your VM is. As I'm sure we're all aware, some VMs are quite personable, and you can have sort of like a common sense conversation with them, as I would say. Other VMs are almost like programmed Amazon robots, where it's sort of like, I've been told to say this, so even though I know it's not realistic, I'm still going to say it, kind of thing. So I think the negotiation probably is critical to start throughout the year, fostering that relationship with your VM. So you, a bit like Andrew's just said, you've got a clear idea of what's important to them. So at the minute, I think we probably all agree that net PPM is their biggest stick, and that's what they're chasing now instead of growth at all costs in terms of volume. And then know what's important for you. So my VM will routinely come to me and say, Tom, I've got to present this to you. I know you're going to say no because it's a report that doesn't exist, and we can't give you an example, and we can't give you a free trial, but I've got to tell you. And we laugh about it and they present it, and that's it. But I think you've got to try, from my experience, to try and put the human side across to it, because that's where you're going to get your wins. If you work well with your VM throughout the year and sort of give them a little bit and sort of just don't let them forget they owe you one on that, then the actual AVM negotiation will be a lot easier, because they might come around and say, look, we need 1% in this or whatever. And rather than give them 1% in terms, so it's black and white signed contract, you might give them 0.5% reduction in cost price across the board, kind of thing, to sort of appease them. Because I think one thing we'll probably touch on later, and I've seen in the questions already, is can you negotiate backwards with Amazon? It's doable. It is not a lot in my experience, but it also, that really depends on, like Trav says, how much you can flex your muscles in that vertical and sort of say, you know, we provide you with 10 million quid worth of sales a year. So are you really going to argue the toss with me for 1% or whatever? Maybe not. Whereas if you're a smaller vendor, you're probably going to have to meet them in the middle somewhere. But I think that the two most key pieces of advice I would give are humanize with your VM. Try and build that rapport with them. Again, as I said in the intro, that doesn't always work out. And obviously, particularly sometimes if you're new to a company and you're looking to sort of make your mark on it, you're perhaps a little bit more bullish than you'd like to be. But at the same time, also know what's important to you and know that account inside out. So even if it's 0.5%, if Amazon comes to you and say, our net PPM this year is 20%, and you know, because you've got that data month on month on month on month from Amazon, and you've compiled that into your own data set somewhere, you can say, no, it's not, it's 21.5. And I think, without sounding unethical, I think sometimes Amazon don't like conflict and don't like to be pushed back on. And if you can push back and argue and show that you know what you're talking about, then you might sometimes just confuse them into thinking, oh God, I'll just get this signed off for say 0.5% or 1% or whatever. Because like Trav says, they don't really want this to bleed into the next year, because and as a brand, you probably don't as well, because all that's going to happen, particularly if you end up agreeing to an increase in terms, is they're going to retrospectively charge you for that. And if you haven't built that into your costing model and it comes to the 1st of April and you suddenly get a $3,000 bill that you weren't expecting, then no one's going to be best pleased about it, but you haven't really got a leg to stand on.
There's something really interesting you said there, though, Tom, about almost prepping in advance for negotiations and actually thinking about it throughout the year. I think it's very easy to class an AVN as a moment in time that happens in this next quarter. It's, how can you manage your net PPM towards the target that your counterpart at Amazon has? So when it comes to those negotiations, you're in a brilliant place. You've shown them that you're giving. So it doesn't become a moment in time, give and take. I want to fight for this point. You want to fight for that point. You're showing them throughout the year. You're showing them across every contact point that you're trying to work in partnership and trying to build a really solid relationship together. I still see Amazon very much as a two-way street. It's not often the case that it comes across, but it's still a human being on the other side. We've got one experience in our business where we've had to go hard with a negotiation with Amazon, and the contact we were dealing with at Amazon went harder than we expected and literally threw the toys out of the pram to a point and said, don't worry, everything I have offered, I'm literally taking off the table and I'm not going to move back on that. So they do sometimes dig their heels in, but I find if you can lube the wheels of the machine throughout the year, build a good relationship, when it comes to that pinch point, there's a bit more give and take and you can be a bit more successful.
Can I play devil's advocate for a minute? Just maybe a question for you, Tom. I know obviously you're appealing to the human side of Amazon, and I feel like that's a side that maybe a lot of us don't actually interact with that much. We tend to be dealing with the chatbot AI support team. What would you say to someone who says, well, I had a really good relationship with a vendor manager, and then we've heard it all before, they left after 18 months, or, we got a new one. I'm sure there are loads of people that's happened to. It's like, I thought I had a really good relationship. We negotiated this. Now we've got a new person. They're coming in. They're being super aggressive. They just want to push for something completely unreasonable. What would you say to them? Sorry, I'm just kind of playing devil's advocate here.
Yeah, no worries. I mean, again, I think it's about prep and having your ducks in a row beforehand. So obviously, I'm probably pretty old school in that we'll have a conversation. I'll be like, can you email me that? Because I want that in writing kind of thing. So if we ever have to reference it to your category lead or my MD or whatever, then that's fine. And then I think also just push back, like Andy says, know your worth to them. But one of my top tips is if you operate through Vendor Central, try and operate through Seller Central as well as a contingency plan. So if something goes wrong in your AVN and they cut POs, etc., you've got something to fall back on straight away. And if all of a sudden that starts taking off to the same level as your stuff in Amazon FCs, then you've got more leverage to go back to them and say, look, we could just do this without you, because what are we getting for AVS? What are we getting for return rate, for damage allowance, etc. But again, Chris, you're 100% right. I think in 3.5 years at Cosatto, I've had 4 VMs, 2 really great ones, 2 not so great ones. And I think the key is, without again sounding very unethical, is that when you get a new one, try and manipulate them into what it is you want from them. Let them know how good your ex VM was, and if they weren't very good, let them know what their shortfalls were, and as a business what you're expecting. Because even though the AVS term isn't necessarily your VM, it tends to be the most expensive thing that you pay for within that contract. So know what that's worth in terms of pound notes. So for example, if you do 1.6 million quid a year and your AVS is 7%, then you're paying like 105, 110k for an Amazon specialist. And the likelihood is you probably know more about Amazon than they do. So it's the most expensive employee that you will ever have. So I think from day one, you've got to sort of tell them what you're expecting from them. One of my favourite tactics, which honestly gets me nowhere, but does just buy you a little bit of time, is when you get your quarterly or every half AVS survey, fill that in and take verbatim snippets from that, because it'll be like, what do you value more out of these things? And the biggest one is like growth strategy. And that is the one I hammer Amazon with constantly, because I'm like, what are you giving me as a growth strategy, barring reduce my price, give you more SOA, or spend more on AMS? Because that's not a growth strategy. That's just eroding our margin. It's somewhere along the line kind of thing. What I would look for there are market insights, and you're probably going against a brick wall there. You're never going to get them to say, oh, well, such and such do this or such and such do that. That's where Andy and the Trav and the guys at Venture Forge can come in and help you.
Good call to action there, Tom. Thank you.
Yeah.
I might be invited back again. But yeah, know your worth, and they're not going to give you the information. They're going to give you the bare minimum. Sometimes it's who shouts loudest and who shouts the most with them. And again, you'll all know that from your own sort of personality traits. If you can work well with someone, do that. If the time's there for a bit of pushback, don't be, like Andy says, don't be afraid to go back to them, because it is a two-way street. Essentially, they might be massive, but it's just like dealing with John Lewis. It's just like dealing with Very. It's just like dealing with Argos. You need each other. As long as you're selling stuff on their platform, they will want you.
Yeah. And I think, sorry, Jojo, just to add to that, is get them excited about your brand. If you have any NPD coming up, if you have any development days, if you have any trade days, invite Amazon to it. I mean, whether they'll come is one thing, but I remember in my experience, I always used to enjoy going to like sort of the beauty NPD days. It's like, I mean, realistically, how many different kinds of face cream can you get that gets reduced wrinkles? But you're in person, you get to see the product, you get to feel the product. They give you the price points, they give you the benefits, and it also allows you to paint a bit of a better picture to your AVS and your vendor manager of what's to come. It also gives them a little bit of extra buy and a bit of skin in the game, because I think they want to feel as an extension of your team. Obviously, it's Amazon and you, but they are an extension of your team. If you've got good relationships with them, they'll probably do you some extra favors. They'll escalate some tickets. They'll upload some images, well, whatever it may be type thing. But I think get them excited about your brand, whether it's obviously within Amazon's guidelines, give them some small samples to try out, whether it's new flavors of products, new looks, new feels, new benefits. Let them try it, let them feel it, let them sort of get an intrinsic interest in it as well. I've really felt that that's helped like that, because yeah, like I said, they're an extension of your business. Even though you are sort of paying them, you want them on your side to the best of their ability.
Yeah. Can I, guys, just jump into a slightly different area and kind of start to talk about kind of what's important from a terms point of view? Tom, quite interesting. You started to talk about AVS. You mentioned SOA. We've not yet touched on Premium A Plus, Vine, marketing. When you're going through this negotiation, there are a lot of things that you can interweave into here. What should a brand be talking to Amazon about? What's important? What do they need to watch out for in those trade terms?
I mean, I guess part of it is sort of retrospectively looking at what you've been paying for the past 12 months. Have a really good handle on what's worked for you there and what hasn't. So, for example, co-op marketing or always on marketing, I'm not 100% sure what they're calling it this year, is sort of like a percentage that they take from your net receipts, and essentially it goes into off-site Amazon marketing and development.
It's the Christmas party fund. It's the Amazon Christmas party fund that goes into.
Exactly, completely immeasurable, and that's it. You're probably better off. And if you don't feel like that's good value, then maybe you could take a little bit of that and put it into a discretionary marketing fund, which again is maybe almost immeasurable, but at least you're in control of the banners that are appearing on site, rather than saying, oh well, we're trying to drive people into Amazon from Google or whatever, because ultimately that probably doesn't benefit your account. AVS will always be their big one, because they'll assign you a specialist. Interestingly, I think that they may be taking a step away from that because they've got too many accounts and not enough specialists. So they're almost happy to sort of let you go back to self-service. In some cases, depending on your percentage, I'd say, yeah, go for it. In others, I think even though the AVS guys get a bit of a hard time, they probably are worth the weight in gold if you need escalation on anything financial, or we use ours for European product creation. and we just basically send them our UK ASINs and they do the rest, kind of thing. Well, I'm sure they don't, but they manage the process of doing the rest. But again, know what you've paid for last year, sort of maybe mark that out of 10 as to how you think value for money wise you've got with that. Know what it costs, because Amazon hate that when you go to them and you say, we've paid you 3% for this and that's 70 grand or whatever that figure is. It's like almost like they don't know what to do with that, because you're quantifying it and you're taking it. Amazon love acronyms and bits and rubbish like that, whereas if you humanize it and treat them like any other account, all of a sudden they're like, oh no, we don't really like this kind of, we want to be in control of the narrative. So know what's worked last year and what hasn't, and then I guess speak to other people, speak to the guys at Venture Forge, speak to people that do your job in other companies and sort of ask them what they negotiate on, because things like Premium A Plus, as Andy just said, Amazon come to us and say they want 4% of our annual net receipts for Premium A Plus, but you can get it for free through Seller Central. So why would you do that? And again, if you push back to Amazon and let them know that you're in the know on those kind of things, then all of a sudden the sort of dialogue tends to change a little bit, and they probably treat you with a little bit more respect.
Yeah, if I can just add to that as well, I'd say like examine maybe unused or lesser used programs. Like I've spoken to a lot of people who, for example, they're paying for Vine, but they never use it, or they barely utilize it at all. But that could be a percentage point or two. So it's almost like you can give with one hand and take with the other. It's not perfect, because that's going to be a problem next year. But I think it is making sure that whatever you're paying for, you're using. And if you're not using it, then don't pay for it. But it's like taking that overall account view, and like you're saying about that 4%, it's just ridiculous that they would try and weave that in within their narrative. It kind of makes sense, but in the overall picture, it just doesn't make sense at all. So,
and I think.
Sorry, go on. Keep going.
Sorry. I was say maybe also take parts that paints the best picture. So if for example, you're in a category with a high returns rate, for example, and Amazon's like, yeah, I want a big percentage point on damage large returns, whatever like that. Take terms to like mitigate that. So if you're in the fashion category, for example, include sizing charts, include like really robust descriptions, really break it down for the customers, make sure that their purchasing decisions as informed as possible. Just because otherwise the following year, like say Amazon's going to get back to you and say, hey, you've had like a massive returns rate, we need to increase this percentage. So try and mitigate that as well, because if you don't need it, like you said, you could probably transfer it into another pot to get some intrinsic value out of it. So I think try and minimize the negatives that Amazon can hit you with by having sort of solid A+, good descriptions, good bullet points, infographics, sizing charts, whatever it is like that, just to give the customer the best buying decision possible. Just so, Amazon can't use that as leverage against you on some of those metrics as well.
I'm going to play devil's advocate here, guys. I've got a very, very simple brain, as I'm probably most of you are aware by now. But for me, Amazon buys something at a price, they sell it to the customer at another price. There's some terms in the middle, but some margin drops out at the bottom of that. Is it not the case that if you, let's say, Tom, you pulled back on that AVS and said, nope, I'm not having that, and that's 150 grand potentially of cash taken off the table for Amazon, surely they're not going to lump that in somewhere else in your terms, whether that's pushing the buy price down, whether it's increasing marketing contribution, strong arming you into taking Vine. Surely if you win in one area, it's coming off another. Can you truly take cost out?
Quite potentially. I think just for total transparency, I think this year we had a 1% reduction, which in the grand scheme of things is neither here nor there. But obviously then if they want a 1% increase next year, we're sort of at where we started. So it largely is what it is. But yeah, that's 100% right, Andy. If you want something taken away from somewhere, the likelihood is it's going to get added in somewhere else. But you need to know what that somewhere else is and what that offers for you. So for example, if Amazon come to us and say our net PPM isn't where we need it to be, okay, well, again, rather than give you it in terms, because if we increase our terms, we're never going to trade far enough backwards to get it back where it is. What we'll do is we'll be tactical and we'll offer you some cost price reductions across basically our most profitable items to us. So we're still seeing a good margin out of it, but we know that's worth X amount a month or a year to you, and therefore you're going to get Y back out the other end, which is actually something we've recently just done. We went through a quarter where our net PPM was way below what Amazon were expected, and thinking of the AVN negotiation at the end of the year, it's like, well, you might as well nip it in the bud now. If you kick the can down the road for 6 months and continue with poor margin, at the end of the year, I think one tactic we all saw last year was Amazon coming to us and saying, we're 2% away from our net PPM target, therefore we want X amount of pounds up from you. We had that conversation last year and we just said, no chance. You're living in a different world if you think we're going to give you that kind of cash. And we agreed that we just sort of make real steps to change that this year, which we have. And hopefully this year's AVN will be a lot smoother because of it. But I think if you're on top of it month to month to month, you've compiled all the data you can extrapolate from VC, and you know where you're at, and you've got that honest relationship with your VM, then yes, you probably will have to put it somewhere else, but it's knowing what's going to work for you. So for example, again, use marketing activity. Is it perfect? Absolutely not, but at least you're in control of it. Whereas if they try and sell you some new report that means nothing, has never been sort of means tested and is all largely immeasurable, then it is what it is. Installments, I think, is a good one to get on board with if you sell higher ticket items. That's always a pretty quick win. And then Vine and stuff like that, we tend to use that as a bit of a stick for us and say, look, we'll agree to do this if you give us X amount of Vine credits, because realistically, we all know they're not worth 1,500 quid per ASIN or whatever they're trying to charge. And it's obviously quite a quick and easy way of getting reviews.
Fantastic. Thanks, Tom. I was keeping an eye on the time here, James. Probably got about another 10 minutes before I want to go to audience Q&A, and probably two more topics that I'd like us to talk about. One being European and the approach to Europe on a vendor account, and then I'd like to maybe take your kind of top tips to people that are listening before we go to Q&A. In terms of Europe, should a brand have pan-European terms across a vendor account, or should they be operating in each market with completely separate terms, or is it not quite that simple?
So I think obviously Chris is definitely the man with the sort of answers here. But if from my side, I'd say obviously do your internal metrics. Again, data is key. If it makes sense and there's not too many discrepancies between market, maybe your logistical cost, your storage cost, your local cost price, your material cost prices, depending where you get it manufactured. If those are pretty much aligned across the board and there's not too many discrepancies, then it sort of makes sense. I also try and push for like independent sort of agreements per market. You don't want to sort of harmonize everything, which may make everything seem a lot easier, but then later on you're fighting per locale to try and recover any margin that you can because you've already locked that in. So yeah, I'd say start again, looking inwards, look at the data, where it makes sense, what are your logistical costs to get it to Europe, to the Far East, wherever it is like that, and then sort of make it on a case-by-case basis. Don't just agree to it because it's easy. I mean, nothing at Amazon's easy, so might as well put in that extra effort, do that due diligence, and make sure that it makes sense from an individual regional P&L sort of view.
Yeah, I just agree with what you said there, Travis. I think that examining, like you say, that the overall profitability and the cost is very important. We see Amazon trying to do a merge to all the pan-EU accounts, where it's almost like you have the UK account and then all your other European accounts fall under one bucket. I've seen people that actually advocate more for a kind of a two account, the two contract approach, where you have one for Europe and one for the UK. It's just a Brexit thing. Kind of depends slightly on your fulfillment model. If you fulfill, you've got a warehouse in the UK and a warehouse in, let's say, the Netherlands or somewhere like that, then I think that it makes sense to structure it that way. But I think that, like what you're saying, if it's just easy and it just keeps it simple, good. But if it's easy but it's crappy terms, then don't just accept that for the sake of it. It's worth taking the time to drill into each market. But I lean towards having a two contract, one for each region approach. But obviously, it depends slightly on the company in question.
I can see why you come from that view, Chris. I think the way I saw Amazon shift post Brexit is very, very clear. There's whether that's seller or vendor, there's a UK business, there's a European business, and there are various tactics that Amazon are deploying to allow those two to bridge a little bit from an operational perspective. But you're quite right, there are two very distinct markets now. The only other challenge I'd throw into this is the context of the brand and the situation that they're in. We've got some clients where Amazon is saying the only option is the two-pronged approach. Take a UK account, take an EU-wide account. But those brands already have exclusive distribution rights in Sweden, for example, and Amazon won't allow them to take Sweden out of that contractual mix. From a brand point of view, they now can't go over European-wide contract because they will breach their terms with their Swedish partner. So I think the general broad brush of that two-market approach absolutely makes sense. But I think the brands have to look internally and think much more about strategy, not just operating capability or logistical capability, but where do they want to be? How can they operate in those markets? Where has the brand got strength? Where can they actually succeed? And where can they get some success from?
Absolutely. And I think just to add to that, one thing that we're experiencing at the minute is, again, it goes back to knowing your account inside out. So if Amazon are coming to you and sort of saying we've got net PPM challenges, that might not be, if you've lumped everything into one agreement, that might not be your predominant market. Your predominant market might actually be performing exactly how you anticipated. And it's your sort of smaller incremental business, for us, Europe, that's sort of doing the damage a little bit there. So I think we went with the lumped everything into one because we didn't have any brand presence in those markets. And we just felt we were getting a good deal from Amazon to be able to sort of kickstart ourselves into Europe. Apologies, by the way, if anyone could hear my daughter in the background, my door saying "Dada."
Tom, that's the best contribution we've had all morning, mate. Bring her in.
But yeah, I think with hindsight, I'd agree with Chris. We'd have split it because obviously then it comes a tricky conversation where you sort of think, well, my UK business is worth X, my EU business is only Y. And it's the Y that's dragging the net PPM down. So I think with hindsight, if you can at the beginning, split them out, definitely.
Yeah. I think even though you say split them out, Tom, you then look at Europe as a market, and let's say, I want to make up an example. You take your prams into Italy, where you are, for whatever reason, naturally positioned as market leader because you've got the right product at the right price, just in the right market. But let's say in the French market, there's an existing brand that is a value price leader, and Amazon decides that they have to discount your lines to chase that down. That kills your net PPM, and that then might hamper your overall European business. So I can see, having heard your kind of contribution to that, real operational simplicity and value in having less markets. I can see more strategic control in having more markets and different and separate agreements where you can start to isolate poor performing markets, good performing markets, and have completely different strength in each conversation, and equally accept your weakness in other markets where it's not going to impact you. So I'm guessing, I guess I've asked the question, but I think the answer is there's probably no right or wrong solution. It's very subjective to your business, your market, and what you're trying to do. Brilliant. Well, before we move on to audience Q&A, can I maybe just do a quick whip round of the four heads? I'm going to volunteer to go last. Guys, I want to listen to what you've got to say. Maybe start with you first, Travis. What are your top tips for people going into their upcoming vendor negotiations?
So first one would definitely be, I know I've harped on about, but know your data. Know what you've done well, know where you've missed mark, and then Amazon is going to ask about it like that. So cover your own back and sort of preemptively find what questions they might ask. So know your data internally, whether it comes from margin, whether it comes from logistical support, whether it comes from problematic reviews and ratings, anything along those lines is know your data. Second one would probably be leverage your worth. So if you know you're a key player in the market, or you've got something that no one else can have, I mean, shout about it, to be honest. If you can offer Amazon exclusive products, for example, throw that into the mix, because they know even if it's a 6 month exclusivity rights, they're going to be 100% earning that margin. They're not going to be price matching against any of the competitors. They're not going to have to worry about anything like that. So obviously just make sure that you know your worth within it. And then I'd say what we've really alluded to is like the more personal side of things is be firm, but not confrontational type thing. Amazon wants a long-term partner. They don't want to have to fight every single year. Yes, your VM might change, but generally your CAT lead, the SVM, think of Amazon almost as a funnel. They get like the central planning team. It goes on to category lead, senior vendor manager, AVS type thing. So yeah, be firm but not confrontational when it comes to it. Listen to what they ask, analyze what they ask. Does it make sense from your logistical point of view? Can you do extra deliveries? Can you cordon off stock for like key periods? Can you give cost price reductions? Can you set up a promotional pot? Really analyze it and come back with honest answers. And yeah, to just play open cards with Amazon. Obviously, don't give them the secret sauce or the secret recipe to your business, but just play open cards with them and let them know, yeah, we're really struggling on this part. This is why, but this is what we can offer you in return.
I love the fact that I've seen Tom smiling and writing down firm but not confrontational. Chris, can I perhaps come to you next? What are your top tips for this upcoming vendor negotiation season?
Yeah, sure. Well, you stole one of mine, Travis, which was know your data, talking about profitability. I would just stress again, factoring in the shortages and chargebacks. I see a question, for example, from Fiona in the chat talking about what's the best way of doing that. We can probably zoom in on that in more detail, but just pulling out that information and having it all broken down by ASIN level, very, very important. For us, we're more on the operational side in terms of integrating through EDI, getting that operational flow internally going well. And I would either go to Amazon with that as a challenge if you're not doing it internally, but if you are doing it and you've invested in that in the last year, you can then go to that with them as a bit of a leverage point. You can say, look, we're committed to you as a business partner. We've invested in our warehouse. We've invested in our integrations with you. You've asked us to do this, and we've now invested on our side to do that. What is it that you can give us, in return? Like, what does that benefit both of us? So kind of like you're saying, Travis, using that language of a partnership, using that language of mutual investment, in terms of, we see this as a long-term sales channel. We've spent some money upgrading our warehouse. We put scanners in. We can print all our stuff. It's very smooth. What are we going to get from that in return? And then the final thing, sorry to use the word return, it's on my mind, is just thinking about that returns allowance as well, and all those little smaller operational costs which can just sneak in there. Can be a percentage point here or there. For some items, it can be quite a lot more substantial. So just looking at that overall picture. And not allowing stuff to slip under the radar that you think now isn't an issue, but in 18 months you're going to actually turn around and say, oh, damn, we can't. It's much harder to remove that later on.
Fantastic. Thank you, Chris. And finally, over to you, Tom.
I think the guys have probably covered most of it. I think know your account inside out, particularly this year, more so than anything. Know what your net PPM means to them and how far you are ahead or behind of your agreed target in your VIP. And then also don't be afraid to say no. Like, it doesn't have to be a firm no. It's just your VM will probably want to tie these negotiations up with you on call one in the first 10 minutes. And if you've got quite a good relationship, that's maybe not beyond the realms of possibility. But always take time to consider what's good for you and your business. Run the figures. Do your due diligence, and go away and sort of say, right, okay, I've heard all that. Can you put that in writing? Email me what it is you're requesting, and we'll have a think about it and we'll chat on the next weekly call or whatever that may look like. But Amazon are massive, but don't be afraid to say no or keep them at arm's length for a little bit, because ultimately it's within everyone's benefit to get these negotiations tied up pretty quickly. But at the same time, I have spoke to other people that do my role in other companies where these negotiations have taken like 6 to 8 months. POs have been stopped, born to runs been cut off, stuff like that. You don't want to get into that situation, but don't be afraid don't feel like you've got to say yes at the first option.
Some great tips. Thank you, Tom. I think to add my thoughts to that, 100% my first tip written down here, know your data. I think that's a real common thread coming through absolutely everybody. Know your data at a granular level, not on account level. Then you've got to know what matters to you as a business. What are you trying to achieve, and equally what doesn't matter to you as a business? What can you give on? What can you allow Amazon to take on? Negotiate, but do that negotiating with give and take, and do that across the year, not in the very, very finite window. I think if you know across a year, or you should know as a brand across the year, what's important to Amazon, what's important to your contacts at Amazon, you should be able to head into a negotiation knowing what's coming in the main. There will always be the curveball. Maybe you're already being prepared for what you're giving. Maybe you're already having had that conversation, and also having your Amazon contact prepared for what you want to take on as well. Lay the foundations and make it a very easy conversation. I say easy conversation, an easier conversation. I don't think anyone's got an easy one coming up. Right. Speaking of easy questions and easy conversations, we have a backlog in the Q&A panel. So, gents, this is where I just ask questions, and unfortunately, it's each of you three that gets put under the hotspot. We'll try to get through these as quick as we can do. We're going to take the first question from Adrian. Is there a benchmark on minimum PPMs? So I guess the question here is, what are Amazon looking at as a net PPM target? How much can you trust what Amazon are telling you versus the category? And how can you understand where you're at? I guess the crux of it is, what is a net PPM target, and can you trust what Amazon are telling you if they're actually telling you anything at all?
Anyone want to go first? So I think it's within Amazon's best interest to sort of build that trust, because also if they just sell you down the river on an absolute lie, you can almost do the analysis to an extent on your own side. Obviously, you get the net PPM, but you also get Amazon's contribution profits. Obviously, they won't mention any of that, but you can sort of think what that goes into it. Obviously, like storage space, input costs on like raw materials, picking, packing, all those good things. So the minimum PPMs, I'd say, yes, be quite sort of wary that there might be a little bit of an overinflation on it. Obviously, any extra margin's good margin because it goes into Amazon's coffers. But I think it also really depends on the category type thing. Obviously, if you're in a category with lower ASP goods that sell a lot, obviously Amazon might make that up in volume. But if you're in a category where there's a high returns rate, there's a lot of extra intrinsic costs that go into it over and above beyond just shipping it out. Might be returning it, restocking it, re-warehousing it. Also be cautious of that. Or if it's like sort of bigger, bulkier products, they'll obviously have bigger space needs in the warehouse. They'll be more expensive to ship. It's going to take up more cardboard boxes or anything like that, but feeds into Amazon sort of extra additional costs. So yeah, I'd say take it with a pinch of salt, but I'd say for the most part, if you have that good relationship with your vendor manager, they are pretty much quite transparent with it. It's within their best interest not to sort of overinflate it, because yeah, that's just a bit of a trust buster.
I think a couple of points to add to that. I think that the net PPM is one of the things that your Amazon contact will be KPI'd on. So that does matter to them. Achieving that number will ultimately be triggering their bonus in some way or contributing it. So knowing how much it means to that person is important. So not ignoring it and thinking I can just shoot way below it because the guys are BSing me and they're just trying to manage margin. It fundamentally matters to that person and therefore your relationship. I'd also say that the net PPM target will be contextual to your category and moment in time. If Amazon are going big in a category to grow the top line, they may be very happy to sacrifice net PPM as part of that strategy. The next year, that might fundamentally change. So if Amazon are talking to you one year about a net PPM that's down here and next year it's up here, that doesn't necessarily mean that they're trying to have your pants down. It's actually something has shifted. There's a reason they're asking for that. And I think understanding what they're doing gives you a bit of that context, Adrian. Right, let's jump into the next one. A question from Fiona. So Fiona wants to know, what is the best way to review and analyze their account to know their worth and consider our shortages? I think, Chris, when you read this, I maybe interpreted it different to you. I think what I'm reading this as, some of the points that Travis has been making, when you're looking at your account and trying to understand your worth and shortcomings to Amazon in that vendor negotiation, how do you do that? How do you look at your account and work out where you're strong and where you might be weak in terms of your relationship with Amazon? Fiona, if I've got that wrong, please bob another question. But maybe if we take it on that context, how do you know your strength in the Amazon conversation?
For me, I think it's looking at market share and looking at how you position yourself within the category. Obviously, you could still be not, the major player in a market and still have quite a high worth. It's to do with distribution. It's to do with exclusivity. It's to do with if that product is only available through Amazon or if it's widely available. If the price point they get is good or it's kind of quite average in the market. Sorry for the misunderstanding on that slight one. There's to do with shortages, maybe shortcomings, like you say. But I think it's about knowing, this product is a real hot seller, and we're going to give you an exclusive on it or something like that, and then just market share. If your market share has been growing as well over time, it was 10% last year, now it's 20%, now it's 25%. I think you can also lean into that too. And then that's one thing you can go to them and say, look, we're a small player, but we're growing, or you can say we're a dominant player and we have been and we continue to be. And it's trying to do that. You need us kind of conversation. But like you said, also, it's not you need us so much and now we're just going to walk away. But it's hey, we want to work together. But clearly the consumers love what we're doing. So we want to step into that. And knowing your own worth partly, I think, is psychological in the sense that, if you go into that and just say, you've got a lot of value to add, they can come back to your data, but you can say, yeah, but consumers love it. Here is what it is. So I think that it's a posture as well as an actual data backed up conversation.
That's a really good point, Chris. I personally think this question becomes a lot easier to answer if you take the word Amazon off the front of it. And if you're talking to any other retailer and you're trying to sell into Sainsbury's, Argos, Tesco, somewhere else, I think if you answer the question through that lens, what's your worth to them? Are they making good money on your product? Are they making good margin? Have you got a strong positioning in the market from a product and market share positioning? If you've got all of those things, you've got some really good strength. If you've got small market share, you're not growing, and you're missing your net PPM target, you're going to have some challenges in those conversations. You are fundamentally less important. There was a lot of noise the other week about small vendor accounts being kicked off Amazon, and I still stand by the fact it was a load of noise. It was irrelevant accounts that were being removed from vendor. If you are a strategically important account, I would say you're safe and sound. And it comes down to your position and role in the market and whether Amazon sees value in working with you. Okay, let's jump into the next one. Whitney, who's our marketing manager, has got an emailed in question that has come in. If we're happy with our existing terms and don't want anything to change, and we don't want any changes to be made or proposed by Amazon, what tactics can we use to maintain the same terms year after year? I'm going to maybe just ask that question a bit differently. Has anybody ever had the same terms year after year? Maybe come your direction, Tom, or is there always an ask?
No, I think it's one of those. I think broadly, again, it depends on your VM. If you've got a great relationship with the VM, and they know you're hitting your net PPM targets and you're not getting red flagged at Amazon for not making them enough money, then I think it's sort of like their dream to be able to come to the table and say, how do you think everything's gone this year? And you might have some little gripes, but it's not the hill to die on. So you're sort of like, yeah, cool. And if you know your margin's good, your growth has been good, and you're getting the vibe that they're content with their margin, then I think that probably is quite an easy sort of conversation to have and sort of say, well, we're happy with how things are going. So are you. Next year you might want a slight reduction because your costs have increased or whatever. You've had a freight increase that you weren't expecting. So if you're relatively happy with everything and you get the impression that they are as well, I think their job is to tie this up as quickly as possible and tick boxes and say, yes, we've got Gillette tied up to the same terms as last year with no reduction, so therefore we're going to make as much money more if we grow the account. They'll be on board for that. It's just knowing your position and knowing where you are, engaging that through the year and making sure that you're in constant comms about margin, about things that they need from you, things that you need from them. But if you're relatively happy with everything and so are they, then see what they've got to say first, because no doubt they probably will say, oh, we want an extra % or whatever. But the likelihood is if you're hitting all your targets, they will just deal the same as last year.
Yeah, I mean, I don't know if I was just going to add, like, maybe it's just a negotiating tactic, but I would come to the table with an ask from them. And then that way, if they have one on their side, you can kind of counteract it and balance it out a little bit. It's maybe not even an ask that you are going to die on a hill on. Do you know what I mean? You're just going in so you've got something on your side, because then it feels a little bit like they've given, you've given, rather than if you go and say, oh, we're fine. And then they say, oh, great. Well, we'll have 2%, please. Then it feels a bit less balanced than if you come in saying, oi, what are you doing for all your money? And then fine. Okay, yeah, we'll leave as it is. We'll agree to disagree. Then you get what you want. But maybe that might just be me being manipulative.
No, yeah, 100%. Like I say, my thing would always be let them do the talking first, see what they want, see if they're happy, and then sort of go from there. But always have something dangle in front of them. So if like if you're looking at a really granular level, net PPM, for example, at ASIN level, that you could probably offer them a cost price reduction on your worst 10 ASINs, offer them quite a good one, and it will look good to them because it's a 10% reduction. And you might only need to make up 0.3%. But as long as your top 20 ASINs that are shifting all your volume aren't touched, it doesn't really matter to you. It's just sort of window dressing for them. But like Chris said, maybe go to the table with an ask, have something to dangle in front of them that they're going to want from you, that you think is important to them. But if everyone is happy, that should be a relatively good and probably the best kind of conversation to have realistically.
Yeah, and I'd say maybe just keep a wild card up your sleeve in case. It doesn't need to be extra percentage points or extra terms. Just promise them that you'll take part in all the key deal events, that you'll launch maybe a few exclusives, that if you're a really big brand and you can do TV advertising, you have an amazing social media following, that you'll post on the outside to drive traffic inside to Amazon. So maybe just keep a bit of a wild card on the side like that as well. Amazon gets super giddy when you say, hey, yeah, I'll take part in Prime Day, end of summer sale, spring sale, Black Friday. So if you can do that and you have a bit of an SOA part, a bit of a promotional part in the background, yes, you are spending, but you are getting sales out of it, but you're not giving away percentage points as well. So maybe just keep a bit of a wild card. If you know in the future you're going to have a great advertising or marketing campaign on TV, in the paper, social media, well, whatever, just keep that as a bit of a wild card, because I think especially when it comes to Amazon, any additional traffic where they don't have to invest into it and you can use your brand recognition or your brand parity to send it through, they'll be quite happy with that.
Fantastic. Gentlemen, thank you very much for giving us your time today, and thank you for everybody who's joined us. I always try and wrap up on the hour, but Tom, I've heard your daughter in the background. I know your wife-to-be is nearby and you've got a wedding appointment that you have to get to, so there's no way I'm letting this one run over today. I am also very conscious we've got a lot of unanswered questions. So between Travis and myself, we will pick up on those questions. We'll be in touch with anybody who's not had the answers. And if anyone wants some support, wants some advice, some possibly counselling as you go through this upcoming negotiation season, please feel free to drop us a line, hello@ventureforge.co.uk, and we're more than happy to set up some informal time with Travis just to have a chat. As I said, they often become counselling sessions rather than advice sessions, so drop us a line if we can help in any way whatsoever. And a final thank you to all our guests and all our attendees this morning for giving up an hour of your time. We look forward to seeing you on Venture Forge's next webinar about a month from now. Thanks, guys. Have a great day.
Looking forward to it. Thanks everyone.
Guys. Nice
Take care.
Everybody.
All the best. Cheers.